how big do you think this Gift City retail interest can become?
So Malakshmi, I first want to just add to what Abhishek had mentioned. So if you see that we had launched a product called as NYSE FANG product. In a very, very short time, because the fund did exceedingly well, we saw huge participation from retail, from HNI investors, and it became the go-to product. In fact, over the last couple of years, some of our schemes on the equity side were not getting as much flows as we were getting on the FANG side. So, like Abhishek mentioned, it all boils down to performance. Whatever is performing does get lion's share of flows. And mutual fund industry gave you that opportunity of getting retail money, HNI money, in a very simple manner. In Gift City, like Neil mentioned, the advantage we will get is we will be able to get retail applications as well. But the only challenge remains that still everything has to be under the LRS window. And if you manage to launch retail funds within 10 lakhs ticket size or $10,000, 5,000, then TCS is not applicable. But LRS transfers are not as easy as investing through the mutual fund route. So it will require fair amount of education for retail to understand how LRS transfers happen. We've launched an outbound fund about 2 months back. We got a very good response because the fund has themes like semiconductor, AI, digital infrastructure, data centers, all within one portfolio, like Abhishek mentioned, which you can't get access in India. But the challenge which I found most of the investors faced was the ability to do transfers. So the banking system in Gift City is not as robust as we have the mutual fund payment system, where you could transfer money instantly. And once we can solve that, I think retail can become very, very large and can attract huge amount of capital through the Gift City route.
Fair enough. So how does this again rival with the feeder fund structure? Because whatever said and done, that category still exists. And if every AMC is going to sort of, exploit this, and the onboarding is going to be as simple as Neil and Vaibhav are saying it is going to be, what happens to the feeder fund structures?
So one way to look at it is the feeder fund offers you an access into these underlying funds at practically 1,000 rupee SIP or a 500 rupee SIP and a 5,000 rupees lump sum. I don't think we are going to go down to that level. The other aspect is the ease of operations.
The investor who is investing in that fund is not 1,000 rupee, 500 rupee investor, right?
We'll be actually surprised, Malakshmi, to a point that, see, our journey in international investing started, within PGIM, it started in 2018. And very much similar to what Vaibhav said, for us, before our equity journey started from 18 to 2020, the only fund that was growing for us was global equity. We had an SIP book to the tune of about 40 crores, and it was granular. So, as I said, and as Vaibhav kind of chimed in, what performs gets the money. And I think that's exactly what we saw. But having said that, coming back to your main question, if you were to think of it from a parallel, I think ease of operation, simplicity of not worrying about currency, because everybody doesn't understand all those transactions so easily, unless until there is education. I think there will always be a little bit of a benefit that the feeder fund structure would have if the tap was to open.